Let me invite Ramkumar CFO, the CFO of Justdial. They just announced their numbers, I think early today, late yesterday. First up, Ramkumar, can you just break up the top line growth of about 29% in terms of how much was volume growth and how much was realization improvement?
Yeah, if you look at the overall campaign, that grew about 23.5%, and the overall growth in revenue has been about 29%. So you can balance, you can attribute between the volume and the overall growth to the pricing. So what we do pricing action from time to time. Yes, this quarter we did do some pricing action, but those are things that we do it on a routine basis as and when opportunities arise. Yes, overall this has been a great quarter in terms of the revenue top line growth, and there's no specific action as such on the premium campaign. It's just that the overall volume plus the pricing which has led to this revenue growth, and that will continue. It is no different from other quarters.
Mr. Krishnamachari, morning. The margins in Q3 have looked very healthy. In fact, margins stripped of ESOPs is the highest we've seen in the last many quarters. What led to that improvement, and is that sustainable?
Yeah, let me put it, it demonstrates our ability to sort of generate this kind of margin if we are in a steady state. However, we are still in an investment phase. We are investing in sales and marketing. We are investing in Search Plus. That will continue. We believe that you will see increased employee addition in Q4 and other investments that we continue to make in Search Plus. While it is good, while it demonstrates that what the margin that we can generate, but the focus of ours is on growth and other Search Plus initiatives where we are continuing to invest. And I would say that yes, at some point of time I would have a steady state 36% sustainable margin, but the focus is more on growth and investment in the right areas rather than growing up this margin.
You had earlier told us that the ESOP cost would average at about 3.5 crores per quarter. This quarter it's higher at close to 6 crores. Will the average ESOP cost be higher henceforth?
Look, the ESOP is normally, the cost is front-ended in the first, our vesting period is over a period of 5 to 7 years. But the way the accounting is done is a lot of cost is up-fronted in the initial years. So this quarter we did allot additional number of, this within the 700,000, Q2 we allotted 350,000, this quarter we allotted another 240,000. So the cost of the additional allotment of shares has come in, additional grant of shares, has come in this quarter. Hence the expense has been recognized. The entire 700,000 perhaps will be recognized in Q4. So there we believe that per quarter my cost would be about 6.5 crore. That we believe should continue in the next 1 or 2 years, and then it will come down. Overall cost would be to the tune of about 96 crore for the 700,000, which will be recognized as a one-time between for next 5 to 7 years.
All right. Very quickly, you have an approval to raise 1,000 crores. Will that come this quarter before March?
Look, we have not found any immediate short term or in the medium term. We are not looking at, we have not found any adequate deployment opportunity of that fund. Hence the question of raising fund does not arise. As I said earlier, I reiterate that we will raise if and only if I find a suitable opportunity to deploy this fund in terms of any inorganic action initiatives. We have not found anything. We are sitting on 800 crore of cash right now. If at all the question of raising money comes, it will be only over and above whatever I utilize the cash. So right now we have not found any opportunity to invest or deploy these funds. Hence the question of raising funds does not arise.
All right, we'll leave it at that. Ramkumar CFO, thank you very much for joining us with the details of your just announced numbers.